Hi, good morning. Very good morning, all of you. Good morning, Ashish Sharma, Govindappa, Rajarishi, Rajiv Kumar. Is my audio and video clear? Type AC if audio and video is clear. Type AC if audio and video is clear. Yeah, thanks for the confirmation, Rajarishi. Samvedna, good morning. Yes, very good morning, very good morning. All of you kindly introduce yourself from where you are attending the session, mention the name of the bank or organization you are associated with. Kindly introduce yourself from where you are attending the session. Mention the name of the bank or organization you are associated with. Now the time is 11:02. We'll just wait for 2 to 3 more minutes. We can start by 11:05. Okay. Rajrishi Roy from Guwahati, Bank of Baroda. Warm welcome. Anu Manish, Ashish, Chandan, Gaurav Prajapati, Govindappa, Harshal Shankar, Sarva Santosh Kumar, Raghav RK, Rajrishi, Rajesh Kumar, Rohit Kumar, Samvedna, Sri Lakshmi, Sudhir Reddy, Surendra Singh, Yogesh, yeah, Samvedna Singh from Noida, Yes Bank Limited, Rajesh from Canara Bank, Ashish, you are from? Chandan Chaudhary from Bank of India, Ashish Sharma, financial consultant, warm welcome. Yes, others in the same way, kindly introduce yourself. We have 2 more minutes, and if you don't have any notepad and pen alongside, please go and grab it. Please go and grab it. Notepad and pen, very important now. Gaurav Prajapati from Kotak Mahindra Bank, Working Capital Relationship Manager. Wonderful. Yes, others whoever just joined, kindly introduce yourself. We have 2 more minutes. We'll start the session by 11:05. Rohit from Bulandshahr B Financial Services Limited. Okay. Raghav from SBI. Warm welcome, Raghav. Nageshwar Rao from Union Bank of India, Branchard. Manoj Mishra from a rating agency in Mumbai. Karthik from Enphase Energy. Warm welcome, Karthik. Surendra Singh. Warm welcome. Surendra Singh from Bank of Baroda. Okay. Yeah, 1 more minute. We'll start the session by 11:05. In the meantime, let me also make my get my presentation ready. Just a moment. Anish from Karur Vysya Bank, Balasai from SBI. Warm welcome, Balasai. Yes. So let me share my presentation screen. Kindly confirm whether the screen is visible. Yes. Are you able to see the screen? Are you able to see a blue screen? Everyone? Are you able to see this blue screen? Yes. Thank you so much. Let's get started. Warm welcome to this special session on financial ratio analysis. Every Sunday, we dedicate this session for banking and finance professionals and business owners who are really serious about understanding business finance numbers. Yes, financial ratio is a powerful financial analysis tool. It's a powerful financial analysis tool. And let me tell you, using this tool, you can literally get 360-degree view of a business. Yes, I mean it. You can get really a 360-degree view of a business, and it's because of that reasons banks, financial institutions, CFOs, finance managers, finance executives, analysts, even business owners, they make wide use of this tool to take financial decisions. Financial decisions can be investment decision, it can be lending decision, whether to give loans and advances or not. It's investment decisions, whether to invest in a company or whether to invest in a project. It also gives a lot of inputs to CFOs, board of directors, business owners on in what direction they should steer the organization. Okay. So in that context, it plays a very, very, very important role in financial management, in lending, in investment, everywhere. And that's what you are going to learn today. So maybe the session will span for next 60 minutes. I can give an assurance that this will help you to set a solid foundation, not only for financial ratios or financial analysis, it will help you to set a solid foundation in many of the areas in finance, credit, and banking itself. Okay. So that's my assurance. With that assurance, let's get into the session. Before that, just give me 1 minute time. I'll make a quick introduction about myself because some of you may be attending this session for the first time, or you may not know much about me. So, I am CAN Raja, a chartered accountant by qualification, a teacher, trainer by passion. I started my career as a banker with State Bank of India, where I joined as credit analyst and in very short period got elevated as team leader credit processing cell in mid corporate group, where I had opportunity to handle loan ticket sizes ranging from 10 crore to 500 crore. I worked for a period of 4 years, handled 250 plus projects, which is like 5,000 crore plus size. After 4 years stint in SBI, I came out and started my CA practice. During practice, I focused on project finance and debt syndication as my core practice areas. Parallelly, I took up teaching assignments also. I used to teach financial management and strategic financial management for students pursuing professional courses like CA, CMA, CS. I also regularly conduct training program for banking and finance professionals on areas like financial analysis, working capital, project finance, term loan, and so on. I'm also happy to say our e-learning portal CA Raja Classes is an BFSI SSC associated training partner, which stands for Banking, Financial Services and Insurance Sector Skill Council of India, which is a government body, comes under MSDE, Ministry of Skill Development and Entrepreneurship. So if you have joined in any of our courses and if you're going to pass the online exams which we conduct, then you can get the government backed certificate as well. Okay. And I'm also an empaneled faculty with Tamil Nadu Chamber of Commerce and Industries. I train business owners on financial management areas. And finally, I'm also teaching through online platform like this. Thanks to technology, as of today, we have 4 lakh plus learners across 180 plus countries learning banking, credit, finance, accounting, and so on through our structured online courses. This is about me. Excuse me if I've taken more than 1 minute. Now let's get into the core discussion, financial ratios. To start with, let's have a look at this example. Let's say there are two companies, company A and company B. Company A has reported a profit of 5 crore and company B has reported a profit of 10 crore. And now, if I ask you, which company looks more efficient here? Which company looks more efficient? What will be your answer? Can you just say whether it is A or B or anything that comes to your mind? Which company looks more efficient here? Okay, Ashish believes it is company B. Ashish believes it is company B. What about others? which company looks more efficient here? I know the information is very limited, but look at this and tell me, like which company looks more efficient here. Okay. Ritesh is also of the opinion it is company B. Sri Lakshmi also opines it's company B. Samvedana is not in a position to answer. Samvedana believes like information is limited. Manoj, Gaurav is of the opinion it is B. Manoj has some answer. Manoj, wait. Manoj, you are saying as per profitability, B is more efficient. Other things awaited, however, which can change the reply. But I still wonder how you concluded the profitability by looking at profit only. Profit is different, profitability is different, Manoj. Rambabu is of the opinion it's B. Sarva Santosh Kumar is also of the opinion it is B. Okay. Okay. Others, please don't hesitate to participate because you have set aside your Sunday time, right? It's your family time, it's your recreation time, it's your leisure time. You sacrificed all those and you're sitting in front of the device means you want to learn something, right? Kindly participate. Anish is of the opinion it's B. Hari Krishna is also thinking it's B. Karthik thinks it's B. Okay, so Manoj, you are explaining. You mean Pat. Got it, got it. So Manoj also believes that 10 crore looks bigger than 5 crore, so probably B is sufficient. Okay, so let's conclude this. Based on the inputs received, majority of you said it is company B. Majority of you said it is company B that is more efficient. And very few of you said we need more information. We need more information to take a stand here. Okay, I respect both. I respect both. If you said B means obviously yeah, 10 crore is greater than 5 crore. So 10 crore we always think like yes, it's good. It's like comparing two individuals. One individual is getting a salary of 1 lakh, the other one is getting a salary of 2 lakh. Means obviously we will say the person getting 2 lakh is doing better, right? But the story will go upside down if I give you more information. Let's say, let's say the company A has made a sales of 20 crore and company B has made a sales of 100 crore. Okay. Now tell me which company looks more efficient. Is it company A or company B? Now tell me, because at least some of you wanted some additional information. Many didn't ask for additional information, but at least some of you asked for some additional information. So now I have given you very important information, which is sales achieved by these two companies. And now tell me which company looks more efficient. Okay, Gaurav, Manoj, Samvedana, Surendra Singh, Hari Krishna, Raj Rishi, Karthik, Sri Lakshmi, Ritesh Kumar. Hey, look, there is a big shift now. There is a big shift from B to A. Why did this shift happen? Why you changed your opinion? Why you changed your opinion from B to A? What caused the change? Knowingly or unknowingly, you did this comparison, in my opinion. Yes, you compared the profit of 5 crore with the sales of 20 crore, and that helped you to conclude this company is making 25% profit margin. And you compared 10 crore with 100 crore, and it helped you to conclude this company is making 10 percentage profit margin. Are you able to see this? This company is making 10 percentage profit margin. So, what changed your opinion is this parameter called profitability, or we also call this as profit margin. The parameter called profitability or profit margin helped you to change your opinion from B to A because company A is making or achieving a profit margin of 25%. It means their cost is only 75%. Whereas company B is reporting a profitability of 10% means their cost is 90 percentage. Their cost is 90 percentage. Are you able to see this, all of you? Are you able to see this? So when I gave you the standalone information that is profit, majority of you answered either in favor of B or you are not able to take a clear decision, so you are looking for more information. But when I gave you that additional piece of information, that is sales, which is comparable easily against the profit, what you did? Automatically, you went and calculated the profit margin for company A, profit margin for company B, and that helped you to take a better decision, a clear decision, or I can say even an informed decision. This informed decision making was made possible because of a financial metric called profit margin. Is it not? This profit margin only helped you to take this important decision. And what is this profit margin? This profit margin is nothing but a financial ratio. Okay, understand? Financial ratios will give you clear information, better information. You will have clarity, so you will be able to take better decision. And this is the agenda of financial ratios, to give better information, clarity, so the user, the reader can take, or the stakeholder can take better informed financial and economic decisions. Okay. And it's because of this use case, or it's because of this benefit only, banks and financial institutions are taking their thousands or say billions of lending decision, not just thousands, lakhs, crores. Billions and billions of their lending decision, investment decisions were taken using financial ratios. I mean it. Okay, it's such a powerful tool, and if you are going to achieve mastery in that, you are learning one of the core skill for the very growth of you in a business. Very, very critical growth of you in a business. Okay, and this is what we are going to learn today. We are going to set the foundation today. So, how many of you are able to follow my teaching style? I mean, it's a little age-old teaching style, like old school teacher teaching by writing and scribbling on the board. But how many of you are able to follow, and how many of you are inspired to learn? How many of you are inspired to learn? If you're inspired to learn, just type inspired so we can get into the core discussion. This is only the example we are just getting started with. Yes, inspired? Yes, wonderful. Let's now get into the core discussion. Yeah. See, we can classify the financial ratios. We can classify financial ratios into various categories itself. I'll put them here. Maybe broadly, I can put them in 5 categories. We can have something known as profit margin ratios, or say profitability connected ratios. We can also have efficiency focused ratios. We can have coverage focused ratios. But in my opinion, they are not the first. They are not the rank one, rank two. In my opinion, all these are put together rank number three. Okay. All these are put together rank number three. It means there are two other critical categories of ratio. And in my opinion, they'll have rank number two and rank number one. Can you guess the rank number two? Like what focused ratio will have rank number two? What focused ratio will have rank number one? Profitability is the engine of a business, but I'm assigning only rank number three. It's the engine. Without engine, nothing will work. But still, engine is only number three. I'm going to give rank number two and rank number one for two other set of ratios. Make a note of it. Liquidity ratios or rank number two, and capital structure ratios. How a business has structured its capital is rank number one. I can very honestly say many of you may not even be aware of this. Yes, profitability is directly connected with common sense. Even you and me, if we go to a shop, when we are paying something, we look for cost benefit. If we are giving 100 rupees as a price for a product, we expect the value to be greater than that. So the profitability is ingrained for us, all of us. We look for profitability, we look for efficiency. Coverage, little technical, not now. But liquidity, some will have an idea, but capital structure, in my opinion, many will have lesser idea, but it is number one. It is number one. So, shall we spend next 20 to 25 minutes to learn about this? If yes, please type CSR, capital structure ratios. We will discuss about capital structure ratios in next 20 to 25 minutes, and I can assure you, you are going to learn the most important practical area. Okay, it is one of the most important practical area, and banks, they value a lot. Investors, they value a lot. Okay, let's get started. And we will do this in a gamified model. Okay, I'm not going to make it as one-way communication. I will ask your inputs now and then. You have to give me like short answers like this. Two alphabets, three alphabets. That's it. Okay, let's get started. Let me draw a balance sheet of a company. In this balance sheet, I'm going to write down certain items. You have to help me, where should I place them? Okay. First of all, what is balance sheet? Balance sheet is a financial statement. What is balance sheet? Balance sheet is a financial statement that will show from where business has mobilized funds and where they have used those funds, from where they got the money and where they have used the money. A business can get money from owners, right? When business gets money from owners, we call them as equity. A business can get money from outsiders. When it comes from outsiders, we call it as outside liabilities. Simple. A business can get money from owners. It can also get money from outsiders. Two sources. When that money comes, that will get used for various purposes in the business. Those purposes can be classified as purposes for short-term use, purposes for long-term use. The money that has come here has been used for short-term requirement, long-term requirement. So if the money is used for long-term requirement, we call that as non-current asset. We call it as non-current asset. If a money is used for short-term requirement, we call it as current asset. Maybe I'll put it here. We will discuss on all this. Don't worry if it sounds too technical. And I want to give a name to the company. Let's say the name of the company is Raja Limited. Okay. Now, what is our task? We have to fill this balance sheet. We have to fill it correctly. And then we will try to understand what is all this, what is capital structure, everything. Okay. Let me use this space. Yeah. So I told you the money that is contributed by the owners or money that is payable to the owners will be called as equity. Money coming from others will be called as outside liability. Okay. So I will write down one item. You have to tell me where we have to park that item. If you believe it is outside liability, you have to answer it as OL. If you believe it is owner's money, you have to answer it as EQ. Okay. Simple. Now listen. Business has taken credit from suppliers. We call it as trade credit. Business has taken credit from suppliers, trade credit 10 crore. So where will you park this? EQ or OL? It is an outside liability. So we will park it under trade credit. Okay. The same business has also got money from share capital, which is also 10 crore. Where will you park this? EQ or OL? It is owner's money, right? So it should go to equity. That business has also availed cash credit facility from banks and financial institutions, 15 crore. EQ or OL? This goes to Outside liability. Good. This business has made a lot of profits. Some of the profits are retained within the business and they are called as, technically, they are called as reserves and surplus. Okay. That is 15 crore. EQ or OL. Please understand, this is profits made by the business, retained within the business, but eventually these profits are payable to owners. So we put them under equity. Okay. Then this business has also taken a term loan. It has taken a term loan of 25 crore. EQ or OL? It is an outside liability, OL. Got it? So we have done this. So now you see 10 plus 15, 25 crore is what owners have contributed in the business. 25 plus 15, 40 plus 10, 50. 50 crore is what outsiders have contributed. The 25 plus 50 overall, 75 crore is the funds that have come into this business. It means this business may have matching 75 crore assets also. Already I told you the assets that are used for long-term purposes is called as non-current asset, and assets that are used for short-term purposes is called as current asset. Now, how to define something as long and how to define something as short? It's simple. If an asset can be converted into cash within a period of 12 months, we will call it as short-term assets. If an asset can be converted into cash within a period of 12 months, it is called as short-term assets or say current asset. If an asset is not acquired or purchased or developed with an intention of conversion to cash, I mean, I don't have any intention to convert as cash at all. I want to use that asset in the business for a longer period. Or even if I try to convert it as cash, it will not get converted easily because they are not the normal asset which we sell on a daily basis. So even if I try to convert them as cash, it will take more than 12 months. So they are long-term assets. We call them as non-current assets. Okay. Now this is the logic. I'm not going to give you example. I'm going to ask you. Hari Krishna is asking, sir, please give some examples. I'm not going to give you example. I will ask you whether it is current or non-current. You tell me. Okay. Now listen. A business has invested in raw material. Okay. A business has invested in raw material. Is it current or non-current? Is it short-term asset or long-term asset? It is current asset. Is it not? So I will put that here. A business has invested in land. Current or non-current? It is non-current asset. Yes. A business has some work in progress. That is, raw material is taken into production but not yet converted into finished goods. We call it as WIP, work in progress. Current or non-current? It is current. Why? In short period, we can convert this as finished goods and sell it in the market. A business has invested in building. Current or non-current? It is non-current. This business has created finished goods. Current or non-current? Finished goods. It is current, right? Business has also invested in plant and machinery, furniture and fixture. Current or non-current? These are all long-term assets. I don't have any intention to sell them in the market. Business has sold some goods to customers on credit. It means customer will make payment after 30 days, 45 days, 60 days. We call them as debtors. Current or non-current? Debtors. Debtors, current or non-current? Everyone, please participate. CA and CA, only two letters here. Don't think too much. It cannot be both. Anjana, it cannot be both. Unless and until they give credit to the customer beyond 12 months. And I don't think any business will give that. Okay. So, debtors are current asset. Now listen. This business, I said Raja Limited, right? This business is also investing in another company. Let's say Remo Limited. This Raja Limited has invested in Remo Limited. With that, Raja Limited controls or has 51% shares of Remo Limited. Okay. Raja Limited only decides the appointment of board of directors. Raja Limited takes part in critical operational decision making, everything, etc. It means Raja Limited has an investment in Remo Limited. Now tell me whether this investment is a just casual short-term investment, that is current asset, or it is deliberately done with an intention of controlling another company, controlling board of directors, and run the business, and it is a long-term investment. Is it a short-term investment or a long-term investment? It's a long-term investment. So we have to categorize this as non-current asset. Okay, please understand the context. Now, let's say the Raja Limited has also invested some surplus funds in Reliance Limited in stock market. How will you look at this? Here, I don't have any intention to hold this shares for a longer period. I am having some surplus fund. Instead of keeping it idle in my bank account, I'm just putting it in the shares. And whenever I need that money, I will take it back. Okay, Rohit Kumar, what is important is intention. If my intention is to get back the money whenever I want, we will call it as current. If my intention itself is to hold it for a long term, it is non-current. Okay. So if Raja Limited makes an investment in Reliance Limited with an intention to get that money whenever I want, it is current. But here, even if I decide, Raja Limited has invested in Remo Limited, even if I decide that, okay, today let me sell all the shares, who will come and buy? I'm holding 51% shares, not even a listed company, not even a publicly traded company. Who will come and buy? It's a very long drawn process. So I cannot liquidate it just like that. My intention itself is to control the company, control the board, control the decision making. And one fine day, if I wake up and say that, okay, let me surrender all this, I don't want to control the company. And if I go to the market, there is no market, first of all. No one is going to buy. Then I may have to take all the efforts to sell this. Okay. So if a company is making any strategic investments like this, I call this as strategic investments. But this is only a liquidity management. Okay. If a business is making any strategic investment, it will be generally treated as long-term investments. So we say non-current asset. So let me put that here. In this case, I'm just giving the name investment in Remo Limited. Investment in Remo Limited. Okay. But if I'm making any casual temporary investment in short-term securities, they'll be called as current assets. And also one more item. I'm also planning to install ERP in my organization. Okay. And I'm going to invest a significant amount, not just a small amount, a significant amount. And I believe this will give me benefits in future, let's say over next 5 to 10 years. This ERP will streamline the processes in my business, improve the efficiency, improve the reporting, improve the management decision making, MIS, everything. So the benefit is very, very, very long. So where should I park this? I should park this under non-current asset. So I'm making an investment in a significant enterprise resource planning software, ERP. I'm not making an investment in a software which is 1,000 rupees where the benefit is one time consumed. No, it's a one time investment, but the benefit is recurring in nature. As long as I use this, I keep getting benefit out of it. It means the investment in software, if it is expected to give me future benefit, then that will also be treated as non-current asset. See, why I'm stressing on this is because this investment in software can take two form. One, if it is a one-time investment, and if the benefit of investment in software is only one or two times, or if the benefit is going to expire within a period, then we will treat the software as expense. Then it won't find a place in balance sheet. But here, The software is going to give me benefit in future. Since it is giving me benefit in future, maybe for next 5 to 10 years, I'm going to treat it as asset, not just a normal asset, but I'm going to treat it as a non-current asset. And one unique thing about the software is you cannot touch and feel. It's there, but you cannot touch, you cannot feel. So we call it as intangible asset. We call this as intangible asset. Okay. So if the software is treated as expense, it will go to P&L. But here, since the software, which is substantial investment and it's going to give me future benefit, I'm going to treat it as asset, not just a normal asset, but a non-current asset, which comes under the category called intangible asset. Software is an intangible asset. Investment in Remo Limited in this case is an investment asset. Whereas land, building, plant and machinery, furniture and fixture comes under a common category of asset called PPE. Common category of asset called PPE, that is plant, property, equipment. Okay, so Anu Manish is asking, what is the benefit? See, if you don't have software, imagine what are the expenses you will incur. Benefit does not mean you have to get some money. Benefit means saving the money also. By having ERP, you are going to shorten the process time, the reporting time, management, decision making time. And if if say for example, if a purchase happens, what the ERP will do, it will automatically take care of updating the stocks, because when a purchase happens, goods comes in, stocks is getting added, accounting data is updated, supplier information is captured, payable information is captured, and every detail goes to all. Ashish, please, here I'm not here to teach ERP. Okay. ERP means enterprise resource planning. ERP is just a software. All of you, please stop the discussion about ERP here. ERP is a software, okay, which businesses will use for streamlining their process, right? So instead of having multiple things, this one ERP will take care of entire system control. I think some of you or many of you are working in bank, right? You work under what? Core banking solution, which is nothing but the ERP. Okay? ERP for banking and financial institutions. Is this clear? Shall we proceed? Because we are deviating from what is our core discussion. Shall we proceed? Just give me a thumbs up. Just give me a thumbs up so we can proceed further. Where is Ashish? Yes. Okay. Wonderful. Let's move on now. Let's move on. Yeah, Ashish, I didn't get any reply from you. Let's move on now. Listen. So, this business has invested in land, building, machinery, furniture. They are making investment in Remo Limited. They are making investment in software. All these are non-current assets. All these are non-current assets. So, I'll try to put them here. Wait, there is some space. Got it? This business is also invested in raw material, work in progress, finished goods, debtors. We will put everything under debtors. Now let me quantify this. What this business has done. Let's say they have invested like 35 crore in non-current assets and they have invested 40 crore in current assets. They've invested 35 crore in non-current and 40 crore in current. So now you can see 75 crore has flowed into this business, and that 75 crore has been used for investing in raw material, has been used for investing in non-current assets. This is what balance sheet communicates. From where the money has come into the business and where that money has been used. Got it? Okay. With this, let's get into capital structure analysis. With this, let's get into capital structure analysis. When I say capital structure, capital, do not think I just mean the share capital. Here, the capital represents the overall money that has flowed into the business, that is this 75 crore. So, my focus is trying to analyze how the 75 crore has been structured. And now I can see the 75 crore has been structured as outside liabilities of 50 crore and equity of 25 crore. Outside liability of 50 crore and equity of 25 crore. Is that clear? Okay. So now what we will do, we will try to break that. This business has an outside liability of how much? 50 crore and equity of 25 crore. So now we have to analyze the structure. The structure is like this: 50 crore divided by 25 crore. 50 divided by 25. When I do it like this, 50 divided by 25, I get the value as 2. 50 divided by 25 is 2 means as a ratio, I can write it as 2 is to 1. As a ratio, I can write it as 2 is to 1. What does this mean? For every 1 rupee of equity, for every 1 rupee of equity, or let me put it in simple language, for every 1 rupee contributed by the owners in this business, there is an outside borrowings of 2 rupees. There is an outside borrowings of 2 rupees. For every 1 rupee contributed by the owners, there is an outside borrowings of 2 rupees. It means whenever this business is borrowing 1 rupee, or whenever the business is taking 1 rupee from the owner, it is also simultaneously borrowing 2 rupees from outsiders. So whenever this business raises 3 rupees, see, whenever the business raises 3 rupees, 2 out of 3 is coming from, that is 2 out of 3 is coming from borrowers, and 1 out of 3 is what coming from owners. Whenever this business raises 3 rupees, 2 out of 3 is coming from borrowers and 1 out of 3 is coming from owners, meaning 67 percentage of the funds for the business is coming from borrowed sources and 33 percentage is what coming from owners. 33 percentage is what coming from owners. Now, I think you will get a bird's eye view of the business. Just look at it like looking from the top. You can see this business is having 75 crore worth of assets, is it not? They have 75 crore worth of assets. But when you look at from top now, you understand that that 75 crore is significantly contributed from borrowed sources, or that 75 crore is significantly built from borrowed sources, and the borrowing continues also. It does not mean the borrowing is closed. It means against this 75 crore, there is a 67% debt, two-third, that is 50 crore. And against this 75 crore, what owners have contributed is only 33 percentage. It means only one third. That's what owners have contributed. Got it? This is what we call as bird's eye view, and this is the basic premise of capital structure analysis. And now you might think like, okay, what is it we are going to make out of it? What we can interpret when we compare this with this. See, when I compared 50 with 25, I got the value as 2. I converted that as a ratio. That 2 is to 1 is helping me to realize that this business is not fully built on its own. This 75 crore of asset is not built on own. This 75 crore worth of asset still has 67% debt. Out of this 75 crore worth of asset, what owners have contributed is only one third. But what looks little satisfactory for me now at this juncture is, okay, owners have contributed one third. Good. Dependence on outsiders is only two-third. Fair enough. A good business can make hell a lot of money even with two-third borrowings if owners are contributing one third. Yes, a business with two-third borrowing and with one-third owner's money, they can make killer money. Okay, they can make significant return on investment if they know how to manage the finance. There is a concept called trading on equity, where business owners, by bringing minimum and going for good amount of debt, they can magnify the return on investment for the owners. Okay, so in that context, when I look at this, one satisfaction for me is like owners have contributed at least 33%. It's not like owners contributing only 10%, 90% is from outsiders. It's not like owners contributing only 5%, 95% from outsiders. No, no. Owners contributed one third, 33%. Fair enough. Okay. This is my initial picture about the business. This is my initial, but not the final one. This can undergo a change. Why? Because with the initial picture, I framed some good opinion about the owners. But do you know what the careful banker, a serious analyst will do? They will question this. Now I said owners have contributed at least 33%. It's good. They will question this. They will ask whether, is it so? Is it real? Do you think owners have really contributed 33%? Can you tell me? You can see owners have contributed 25 crore. Borrowing is 50 crore. So obviously owners have contributed 25 out of 75 means 33%. That's what the balance sheet says. Is there any room for any reduction in this? Is there any space for this can go below this? There is a possibility. There is a possibility. This may not be real. See, I can tell you one thing. This is real. This is real for sure. In the world, if there is one eternal truth is there means that is debt. Because debt will not disappear. Debt will grow. In the world, if there is one myth is there means that could be this. It might look like it is there, but it may not be there. Are you able to get the difference between these two? This is eternal truth, debt. This could be a myth or Maya many times. How many of you want to learn more about this? Type LM. So I will reveal the Maya. Or do one thing. Type Maya. Type Maya. So I will remove that illusion. I will remove that illusion. Because as of now, it is there, but actually, it is not there. As per balance sheet, it is there, but as per balance sheet itself, it is not there. As per balance sheet, we framed an opinion that owners are good, they are contributing 33%, but the same balance sheet is going to tell us, sorry, we fooled you. We didn't cheat you. The same balance sheet will reveal that we didn't cheat you, we didn't manipulate anything, but you didn't treat us, so you didn't know what we are. Yes, the same balance sheet, if you see, the non-current asset has a land. Okay, the non-current asset has a land. That's where the balance sheet is going to give you a different story. What is that? Remember this. Devils are in the details. Okay. We have a saying, no, all that glitters is not gold. Here, the balance sheet is glittering. Balance sheet is glittering. This is glittering. All that glitter is not gold. And if you want to know the devils, you have to go to details. As far as the financial statements are concerned, as far as the balance sheet is concerned, the balance sheet is full of makeup. So if you want to catch hold of the devils, you have to go to the details, and details are nothing but notes to accounts. Okay? Details are nothing but notes to accounts. Details are nothing but schedules. Details are nothing but accounting policies. That's where businesses will play their cunning and ugly games, which many bankers will miss out. Their focus will be reading balance sheet, reading P&L, reading the numbers. But you have to go beyond the numbers, devils, or in the details. What I mean by details is notes to accounts, schedules, accounting policies. Last month, we had one amazing case study for Diamond members where I showed how notes to accounts, accounting policies can make a dirty game. Balance sheet will look too good, but notes to accounts, schedules will make a mess of things. Okay. So what I did is I just checked what is the value of the land. Here I have not given the breakup. Okay. I have checked what is the value of the land by going to the schedules. Then I also went to notes to accounts. And that's where I noticed something really interesting. Maybe let me just resize this. Okay. That's where I noticed something really, really serious. What was that? They made a mention that this land, which is included in the balance sheet, originally purchased, OC, original cost, is 2 crore. But in the balance sheet, they have mentioned the value of the land as 7 crore. How is it even possible? Land purchased for 2 crore, how they can show the value as 11 crore? It means they have artificially added 5 crore to the value of the land. What is this 5 crore addition? For that, they gave an explanation. They said this land was purchased long ago, very long ago. At the time, this was the price. But today, the market value has improved. So what they did, they engaged an valuer. They did the valuation. They did the revaluation of the property. And the valuer said, this land, if it can be sold today, it can be sold for 7 crore. So they took that valuation report as the base and they rewrote the market value of the land as 7 crore. And as a result, they added 5 crore to this 2 crore and they have rewritten the value of the land as 7 crore. And this is legally permitted. This is legally permitted. Yes, companies, businesses can do this. They can do this. And they did that legally. But banks and financial institutions are little finicky about this. Why? Because they didn't want this to be done. Okay. It is not initiated by them. Number one, this is not initiated by them. Number two, this company has no plan to sell the land. They don't have plan to sell that land. So neither they initiated nor they don't have plans to sell. And number three, it is value based on opinion. This is a value based on opinion. It's not that somebody is going to buy this land at 7 crore next year. An agreement has been reached or arrived. Nothing like that. So it is value based on an individual's opinion. And this opinion could vary person to person. So because of all these things, banks always say, okay, you want to do valuation, you do. You want to increase the value, you increase. But we will not factor this. We will not mind about this. As far as we are concerned, your land is worth 2 crore only. When you sell and realize for 7 crore, tell us, we will also factor it. But now we are not going to consider this 5 crore. Okay. And to my understanding, this is the approach of almost all the banks. Whenever borrower revalues their asset and whenever they increase the value, whenever they add or increase the value in the name of revaluation gain, banks and financial institutions will choose to ignore that. They will say, nothing doing, we will not give a damn dash about it. Okay. So what is the impact of this? Out of this 35 crore, they are going to ignore the 5 crore, which is this. It means they will read this as 30 crore only, not 35. So they will read this as 70 crore only. So does this mean they will go and recreate a new balance sheet? No, no. That's unnecessary work. What they want to do is they want to eliminate the 5 crore here But the effect is 75 will become 70, no? And this side will remain as 75. That is not possible. Even they also, when they added the 5 crore, they know adding 5 crore only on one side will not balance the balance sheet. So what they would have done, they would have added 5 crore somewhere over here also. Only then 75, 75. Otherwise, it would have been like 75 and 70. Can you guess where they would have added that 5 crore here to compensate the 5 crore added here? Can you guess? They have added 5 crore on the asset side. It means on the left hand side also, they should have added that 5 crore somewhere. Can you guess? Can you make a guess? Okay, Anjana is saying EQ, Karthik reserves, Rajrishi reserves and surplus, Ashish reserve, Raghav reserve or equity. Okay, so I'll give you the clue. It comes under equity. Under equity, can you guess where it is? Obviously, reserves and surplus. Yes, the reserves and surplus will have not share capital. Okay, it will come under reserves and surplus. Under reserves and surplus, that 5 crore would have been included in the name of RR. That is revaluation reserve. They would have factored it as revaluation reserve. Is that clear? It means this 15 crore is actually, I'll put it here, is actually 10 crore of reserves and surplus plus 5 crore of revaluation reserve. That's how this 15 crore was arrived. It means now we have to eliminate this 5 crore. We have to eliminate this 5 crore. Why? Because we are eliminating 5 crore here. Why? It is not acceptable for the banks and financial institutions. Now, what is the effect if I eliminate that 5 crore here? What is the effect? If this 5 crore is eliminated, what is the effect? The effect is over here. Because just now we said equity means 10 plus 15, 25 crore. Equity means 10 plus 15, 25 crore. But now we are eliminating 5. So it is 10 plus 15, 25. 25 minus 5, it means this should be 25 minus 5, that is 20 crore. Shall I modify this as 20 crore? Please type 20 if it is okay for you to modify this. Please type 20 if it is okay for you to modify. Okay? Type 20. Yes. What we will do? We will make it as 20 crore. How we got this? It is 25 minus 5, so we got 20. What is this 25? 25 is equity. What we are deducting is 5, which is revaluation reserve. And what we got is 20. It means this cannot be equity anymore. 25 is equity. 20 is not equity. So we have to give a name for this 20, right? We will give the name as net worth. Can you type NW? Can you type net worth? This is no more equity. We will call this as net worth. If you're typing means you have understood the concept, okay? We will call this as net worth. We have just given a new name, that's it. This also represents owner's money. Equity 25 crore is owner's money, but now we have realized that 25 crore is a Maya. The realistic version is, as of now, it is only 20 crore. Rajrishi is asking what is net worth. That's what I'm saying. From equity, you remove the revaluation reserve. From equity, you remove the revaluation reserve. The balance equity, the equity adjusted for revaluation reserve, represents net worth. Net worth is nothing but owner's stake in the business. We thought owner's stake in the business is 10 plus 15, 25 crore, but net worth has made it clear it is not 25 crore, it is 20 crore. Net worth basically represents owner's stake in the business. Is this clear, Rajrishi? Okay. Now, since the figure has undergone a change, the ratio should also undergo a change. It's not 50 by 25 anymore. It is 50 by 20. 50 crore by 20 crore. And now the resultant ratio, 50 by 20 is 2.5, and the resultant ratio is 2.5 is to 1. Got it? 50 by 20 is 2.5, and the resultant ratio is 2.5 is to 1. It means for every 1 rupee contributed by the owners, now owner's contribution is called as net worth. For every 1 rupee contributed by the owners, this business is borrowing 2 rupee 50 paise. 2 rupee 50 paise. It means whenever this business is taking one from owner, it is taking 2 rupee 50 paise from outsider. So whenever it is getting 3 rupee 50 paise put together, for that 250 is coming from borrowings. 2.5 out of 3.5 is coming from borrowings. So can you tell me what is the proportion? 2.5 out of 3.5. It's like 71%. 71 percentage is coming from borrowed sources, and 1.5 out of 3.5. Sorry, 1 out of 3.5, not 1.5, 1 out of 3.5. That is 29 percentage is what coming from the owners. Now, pay attention. We had some initial picture of the company. This is the previous situation. I'll call this as situation one. Okay. We had an initial picture where I said owners are contributing 33 percentage. Whatever. Then we had the question, is it genuine? Is it real? Is it Maya? That's how to unveil the Maya only. We took the step, and now we have noticed owner's contribution is not 33%, it is 29%. We thought their dependence on outsiders is 67%, but now we have realized it is not 67%, it is 71%. Now tell me, the ratio has moved from 2 is to 1 to 2.5 is to 1. Whether the ratio is moving for good or is it slightly moving in bad direction? Whether the ratio is moving in good direction or bad direction. Look at it from a banker's point of view. It's moving slightly in bad direction. See, 2.5 is to 1 is a good ratio actually. But the direction, because we started with 2. If somebody has scored first rank, and in the next term, if he's getting second rank, then we'll say it's a bad movement. Right? The same thing here. But now, since already the ratio has moved towards in bad direction in step 1, I want to check whether this 20 crore is genuine. I had a doubt about 25, so we did some analysis. I said devils are in the details, so we went little deeper and we identified something wrong with the land. Now my suspicious, my mind says this 20 is also little suspicious. They are hiding something. No, they are not hiding. They have revealed everything. We are not reading something. They have revealed everything. That's the beauty here. They said whatever they want to say in a very complex, elaborated document. Since we don't have the ability to read, catch hold, and understand, we miss out. That's where many banks miss out at the pre-sanction level itself. Even before sanctioning the loan, they will commit the mistake. Then whom to blame? Okay. So now my question is whether this 20 is also true. That's when something flashed. This software flashed. I told you, this company has implemented ERP. They have invested significant amount. How much? Let's go and see. So I checked their notes to accounts and I noticed, I'll put it here. They have invested a significant amount. For a company of this size, it's a significant amount. That is, they have invested almost 8 crore in building and developing a software, ERP for them. This investment, they have treated as an asset because they believed this will give them future benefit. I agree. This will give them future benefit. And they convince their auditors also, so they have classified it as an asset. But let's think of one worst case scenario. Let's say because of Trump tariff policies, or because of geopolitical pressures, or this war situations, or government policy, or say change in customer. Because of any of these reasons, this business got to be closed. This is a worst case scenario I'm telling. This business got to be closed because of any of these reasons. And they are unable to sell the business to one individual buyer. If one individual person is coming or individual company is coming and if they are taking over the entire business, the story is different, which happens rarely. Since the business is closed, they are unable to find a single buyer to buy all the assets or to take over the business. They have to sell the assets on piecemeal basis. Okay? Each and every asset they have to sell, collect the money, and with that money, they have to settle all the outside liabilities. After settling all the outside liabilities, if anything is available, that can be eventually paid to the owners. That's why we say owners are risk takers because they can take their money only in the end. They have to sell all this. With that, they have to close the liabilities. And if anything is left over, they can give it to the owners. Okay. This is the background. Now imagine they are unable to find a single buyer. They are selling it on piecemeal basis. Land is sold separately, building sold separately, or land and building sold separately, plant and machinery to someone, furniture and fixture to someone. These two different parties. This is done. And this software. Do you think this company will be able to sell this software and recover that 8 crore? This software was uniquely built for them as per their steps, as per the process. Do you think there will be any taker for this software? Do you think someone will come and buy a software which is exclusively designed for them? Yes or no? No, it's a big no. It means whatever the money they have invested in software will become a loss now. Will become a loss. It means why it is loss? Because there is no FB. It is NFB. What is that? No future benefit. There is no future benefit. It cannot be sold. It cannot be converted as cash. But now they are treating it as asset because everything is good. Business is running, business is making profit, everything is fine. But if the business is closed, the one asset that will lose its value immediately is this intangible assets. Intangible assets. But the scenario is different. If the scenario is different, that is, if the entire business is purchased by somebody, then we need not worry. But on a piecemeal basis, and let me tell you, as a banker, as a conservative banker, you should look for rosy situation or you should look for conservative situation. You should look at from rosy angle or conservative angle. Please tell me. Rosy or conservative? You got to be conservative because you are not equity investors here. Equity investors will bet on a company. They will be ready to accept PE of 10 times, 20 times. If If the book value of the share is 10 rupee, they'll be willing to pay 100 rupee also. Why? Because they believe that this business may grow in future. They are betting on money. Banks and financial institutions, they cannot do that. They can do only based on what they are now, what this business now. They can do only, they can take a call only on the basis of acceptable projections. And they cannot think like nothing will go wrong in future. They have to factor all possibilities which can go against the company, which can go wrong in future. Software is one such item. If the business is closed, future benefit stops. As long as the business continues, future benefit continues. That's why it is treated as asset. That's why it is treated as non-current asset, first of all. But if the business is closed, story is over. If the business is closed, these will get converted as cash, but this will not. So banks, what they say, we should always look at from default angle. Banks are supposed to look at everything from default angle. If the borrower defaults, what is available for rescue? This is not available for rescue. So bank says, you have 8 crore, but we will not value that 8 crore. We cannot consider this 8 crore. Why? In the event of closure of business, 8 crore is equal to 0. So banks and financial institutions will say, now itself we will remove 8 crore. It means from 75 they will remove this 8 crore. It means this side also we have to remove that 8 crore from somewhere else. If from here we are removing 8 and if we are removing here, it means from this total we have to remove the 8 crore. From somewhere we have to remove the 8 crore. Can you guess where? We have to remove that 8 crore from somewhere here. From where we can remove that 8 crore. Otherwise the balance sheet will not balance, no? We can remove it from equity. Very specifically, if the reserves is available, you can remove it from reserves. If it is not available, you can remove it from capital because owners are the ultimate risk takers. Any risk should go and hit them only. Okay. So what we'll do now, the reserves and surplus, already we had it as 15. From 15, we removed revaluation reserve of 5. So we had it as 10. It means we still have space. From 10, let us remove the 8. From 10, let us remove the 8. It means the reserves and surplus will become 2. And share capital is 10. So 10 plus 2, it will become 12. Okay. It means we were thinking net worth is 20 crore, but it is not 20 anymore. It is not 20 anymore. Why? Share capital is 10. Reserves and surplus on look it is 15. But from 15, already we removed 5. And now we are removing 8. It means it is only 2. So 10 plus 2, it is 12 crore. 10 plus 2, it is 12. Got it? Got it? Shall I go ahead and modify this 20 as 12? Please type 12 if you are buying this. Please type 12 if you are buying this. Shall I? Yes. Okay. So what we'll do, we will modify this as 12 crore now. And you see how we have done this? Earlier we had a net worth of 20 crore. From that we are removing the intangible asset. The net worth was 20. From 20 I am removing intangible of 8 and what I'm getting is 12. 12 crore. Whether this 12 crore is net worth? No. Net worth is 20 crore. From net worth, I removed the intangible. It means the leftover net worth has only tangible items. So I wish to call this 12 crore as tangible net worth. Shall I modify this net worth as tangible net worth T and W? If yes, please type T and W. If yes, please type T and W. So now I have T and W as 12 crore. Okay. And this outside liability of 50 crore is nothing but the total of this, right? 25 plus 15 plus 10. So I wish to call this outside liability as total outside liability. Shall I call it as TOL? Please type TOL if you are okay with this name. TOL, which is 50 crore, and TNW, that is 12 crore. This is clear? It means now we are going to compare the 50 crore with this 12 crore. 50 divided by 12. 50 divided by 12. 50 divided by 12 means it's like 4.17, I believe. 4.17 is to 1. It means whenever this business is taking 1 rupee from the owners, it will take 4 rupees 17 paise from outsiders. So it will get 5 rupees 17 paise. So whenever this business is getting 5 rupees 17 paise, for that 417, 417 out of 517 is coming from borrowed sources, which is like 417 out of 517. 81 percentage, 81 percentage, and 1 rupee out of 517, 1 out of 517, that is 19 percentage is what coming from owners. I repeat once again. This business has a total outside liability of 50 crore TOL and tangible net worth of 12 crore. So when we compare that 50 crore with 12 crore, we are getting the value as 4.17, which we are expressing as 4.17 is to 1. It means whenever owners are contributing 1 rupee, there is an outside borrowing of 4 rupees 17 paise. So when this business get 517, 417 out of 517, that is 81 percentage is coming from borrowed sources, and 1 out of 517, 19 percentage is what coming from owners. Now tell me, we started with 2 is to 1 as a ratio, capital structure ratio. Then it had become 2.5 is to 1. Now it has become 4.17 is to 1. That is from 2 is to 1. From 2 is to 1, it has moved to 2.5 is to 1, and now it is moving to 4.17 is to 1. Tell me whether it is moving in good direction or it is becoming worser and worser. In terms of direction, I'm not uh, giving my comment on the ratio, because for some banks 4.17 could be even acceptable ratio. But the direction from 2 is to 1 to 2.5 is to 1 to 4.17 is to 1. See, why all this happened? Is it because their outside liability increased? Is it because their outside liability increased? No. Outside liability was 50 crore here, 50 crore here, 50 crore here. What changed? What changed in all the three levels? It's the owner's contribution. Here we thought owners have contributed 25. Then we realized that it is not 25, it is 20. And now it has come as a big shock. It is not even 20 and it is only 12. And I can tell you one thing, we can even move further. We can even move further. If this is level 1 understanding, this is level 2 understanding, this is level 3 understanding, it means there can be level 4 understanding, there can be level 5 understanding, where I can strip this 12 crore, I can strip this 12 crore by going to the details in the notes to accounts, and just imagine this 12 crore for some or the other reason, it is going to become like 8 crore. If the 12 crore for some or the other reason, if it is going to become like 8 crore, what will happen to the ratio? 50 divided by 8. 50 divided by 8. And the ratio will become like 6.25 to 1. What could be that some or the other reason? I said for some or the other reason, it can go down. I have given you the hint also. I said they have made some investment in another company. That investment can also drag this ratio down. That investment can also deteriorate the capital structure ratio of the business. So that could be our level 4 understanding. Then we can have level 5 understanding. See, only if we move to these stages, we get to know the real capital structure of the business. Otherwise, we will be simply wedded to this Maya. We will think owners have contributed 25 crore. Now itself it is shattered, right? It is not even 50% of it. They claim they have contributed, but what is available is only 12 crore. And if we factor some more things like this also, this can go down. This can go even down. How many of you want to dig this deeper? How many of you want to learn this and achieve expertise? Just type if you want to become an expert in this. Type expert. Type expert if you want to move to that expert level knowledge. If you want to gain that expert level knowledge. Yes. Wonderful. So if you want to really gain this expert level knowledge, I need your time. I want you to learn with me. I want you to learn with me. What we have spent today is only 60 minutes, right? We have continuous learning ecosystem where I can give you a knowledge, skill, practical understanding much higher than this. With that word of assurance, I wish to invite you to our membership program called Diamond Membership. Yes, if you want to achieve that level of expertise, if you want to see yourself as an expert, not just for the sake of having expertise, but for your career growth, keeping this as your main focus, I invite you to our membership program called Diamond Live Membership. Yes, this is the membership program we have created for banking and finance professionals who want to achieve expertise, keeping career growth as a main focus. Because growth follows only those who are able to contribute positively to the organization. Positive contribution will come only with three things: expertise. For expertise, you should have knowledge and skill. So we will provide you knowledge, skill, expert skill. When you apply that in your real life scenario, growth will be automatic byproduct of it. Okay. So how this Diamond Live membership will help you? Number one, it will give you access to all our publications. We have published 130 plus courses comprising 8,000 plus video lectures in the domains of banking, credit, finance, accounting, and so on. You will get access to all those. Okay. So already the resources are available. It's not that we have to create something new, it's already available. So through these recorded online courses, you can learn many of them. Number two, we have published 150 plus ebooks. We have published 150 plus ebooks in the domains of, again, banking, credit, finance. If you're someone who believes you can learn more by reading, these ebooks will help. They are practical connected areas. Number three, if you believe that you can learn more by attending live classes, Diamond membership will give you that also. We have weekly live sessions, mostly Fridays. Mostly Fridays. If for some other reason, if that session did not happen, then there will be some compensatory session. Last Friday, I was not able to handle the session because of my other unavoidable circumstances. But we will have compensatory sessions. Every Friday, we will have live sessions, 9 to 10:30 p.m. So after your work time, right? And it will be like 60 minutes, deep, advanced, comprehensive, practical, focused sessions, big problem solving cases that will help you directly in your business, profession, and banking career. Okay. So you will get access to all our past live classes. We have conducted several live classes comprising advanced case studies and discussions. You will get access to all of them. Each and every session will be like 60 to 90 minutes long with a detailed case study analysis. Picked up from real world scenarios, many picked up from students' use case itself. You will have a clear understanding of all this. Then you will be able to attend all our future live classes. Whenever we conduct any live class or webinars or workshop, you will be able to attend all those. Okay? All live. And number four, you will get access to dedicated communities in Telegram. We have two communities in Telegram. One community for Q&A purpose where you can ask your doubts. Another community is for sharing educational resources. Yes, we have an exclusive community for Diamond members where every day we share six resources in the form of Q&A, in the form of mind map, in the form of quizzes, in the form of blog, articles, short video lessons, six educational resources. It will be like 1 minute learning, but it will help you immensely. Okay. And finally, the topmost assurance is you are not only registering for the past, the present, but you are also going to get an assurance for future. That is, in future, whatever we are going to publish, let it be any courses or classes, live classes, ebooks, templates, reading materials, whatever we are going to publish in future, you will have unlimited access. Not, you need not make any payment. Okay, you will have unlimited access to whatever we are going to publish in future. Okay, that's why we call this Diamond membership as a continuous learning ecosystem. Continuous learning ecosystem. Okay, Rajrishi is asking how to resolve doubts in the study material. That's what I said. We have two communities. One Telegram community is exclusively for doubt clearance. Got it? So it's because of these reasons only we are approaching close to 3,000 learners exclusively in Diamond membership. Most of them were already our existing learners, and several new learners have directly joined Diamond membership because they have understood that it is not just getting access to past courses, it is getting access to those rich content courses, highly knowledgeable ebooks, and the benefit of learning live class can be unmatched, that you yourself can vouch for with today's session. You know my teaching style right now. This is how I teach. No rush, no hurry. We'll go aram se, slowly. I repeat. I know I repeat my words. I keep repeating 2 times, 3 times, same words. And I'll ensure it goes direct to your heart and mind. Okay? And the Telegram community and this assurance. So if today's session inspired you to learn more, and if it kindled your desire that you should also become expert, because once you achieve expertise, automatically this is the next logical flow, growth. If you are an expert, you will grow. If you are a jack of all trades, you will stagnate. But if you achieve expertise, you will grow. And that's the secret of success for many, many, right? Okay, now the question is how to join this diamond membership and is there any special offer? Yes, we do have a special offer. Yesterday, as part of Independence Day celebrations, we opened a very, very special offer for diamond membership, and many members have made use of that. But today, I'm going to give you something even more special, Independence Day offer plus the webinar offer. Because whoever attending the webinar and staying till the end of the webinar and showing interest in diamond membership, they always get a special deal. And today, it's going to be even more special coupled with Independence Day offer. So, how to avail this offer? It is simple. Open your mobile and type this number, all of you. Open your mobile, open your WhatsApp, and type this number 90251 00249. I repeat 90251 00249. Send me a message now, right now, called as Sunday Diamond. If you can send me this message now, right now, I will give you a special offer which you cannot miss, which you cannot afford to miss, because it's Independence Day special plus webinar and it's a direct one-to-one offer. I'm also going to give you a link now. Who are attending the session in your mobile, kindly check the chat section now. I'm placing a link. I'm placing a link. Click this link. Click this link, it will generate a message. Send me that message. And please note, only those who are responding now will get this offer. Okay? Yes. Ajin Kia, we just received your message. Ajin, hope you loved this session. Ajin, kindly check your WhatsApp now. I'm putting you the offer. This is our normal offer, Ajin. Kindly check your WhatsApp. Code. So the code, yeah, the code is Sunday Diamond. I'm just putting the link. The code is Sunday Diamond. It's on the screen. Have a look at the screen. It's on the screen. Okay, Ajin, I have sent you the normal offer, but as part of Independence Day and webinar combined, I'm going to give you that special one. If you are joining now, you can join using this special offer price. Got it? And please note, this is Independence Day special offer. Do not miss this. Do not miss this. And this is an investment in yourself for a lifetime. You just make one-time investment, lifelong learning, every week, non-stop, every day, non-stop. We are team. We are a team. We work only to improve, strengthen the core foundation in finance banking credit for our learners. So every day, 6 intervals learning resources, every week live class, continuous updations, new courses, new contents, new ebooks. Okay, all of this. So do not miss this opportunity. And I also got the message from Anjana Reddy. Anjana, you are our existing learner, so I have a very special offer for you. See, existing learners, please let me know, because in addition to Independence Day plus webinar offer, you will also get additional discount because you are our existing learner. So Anjana, kindly check. This is the normal offer, but you are our existing learner. So I'm going to give you this special offer. You are eligible for an additional discount. And please note, offer is available now only. Offer is available now only. Anjana, kindly check. I have sent you that offer. Okay. And Avinash, yes, we just received your message, Avinash. You are also our existing learner. Wonderful. So, Avinash, here we go. This is our normal offer. But as you are our existing learner, I'm going to give you this special offer. If you are enrolling now, right now, you can get into Diamond membership at the special offer price. Yeah, Rajrishi, just put your, see, whoever have responded, if you have not received message from me, please put your number here in Zoom. Okay, Manoj, the payment server, is it showing busy from my end? Manoj, are you okay with alternate payment options like Google Pay or UPI? Let me know. Gaurav Prajapati, we just received your message, Gaurav. Okay. Manoj, I'm giving you the number. You can make payment in this number. 7736022001. 7736022001. Yeah. Gaurav, this is our normal offer, Gaurav, but don't worry. I hope you have understood what is Diamond membership now. So I'm going to open a special offer for you. If you are joining now, Gaurav, you can get into Diamond membership at the special offer price. Manoj, my number for Google Pay is 7736022001. You have sent me a different number, not that. Yeah, 7736022001. Okay, Gaurav, kindly check your WhatsApp now. Kindly check. And please note, this is part of our Independence Day special offer as well. Do not miss this. Yeah, I also got the message from 98710. 98710. Here we go. Kindly note, this is our normal offer. And if you are joining now, I can open up our Independence Day combo special offer. And please note, this offer is available now only. Do not miss it. Do not miss it. Let me know once you are done with the payment. And to all of you, I'm telling you, existing learners, you are getting some additional discount as well. New learners, I am giving you Independence Day special offer. Saranya, yes, Saranya, I'm sending you the details now. Kindly check. You are our existing learner, so I'm giving you this additional offer. If you're joining now, right now, I can provide you the special discount. Go for it. And Golagani Lokesh, Golagani, I think we already offered you Independence Day special offer. Golagani, are you really serious? Are you really serious? If yes, let me know. I will give you an additional discount. If yes, let me know. I will give you an additional discount. Yes. Okay. So here we go, Golagani. If you're joining now, right now, you can get into Diamond membership at this offer price. It's a better offer. Do not miss this now. And Anjana, yes, Anjana, it has so many courses. Just check the link. Just check the link. Yeah. Samvedana, I'm coming to you. Just Samvedana, can you just put your number here? Yeah, Ram Babu, please put your number here. Santosh, I'm coming to you. Santosh, you are our existing learner. I appreciate. And Santosh, if you are joining now, right now, you can get into Diamond membership at a special offer price coupled with Independence Day combo. So Santosh, if you're joining now, you can get into the Diamond membership at the special offer price. Go for it. Let me know once you're done with the payment. And all of you, please appreciate, this is not just another course. Okay. Karthik, please put your number here because I received so many messages, so I'm struggling to manage each and every one. Just give me a moment. All of you kindly stay patient. I'm coming to each and every one of you. Yeah, Prachna, we just received your message, Prachna. Prachna, kindly note this is the normal offer. If you're joining now, you can join at the special offer price, Prachna. I'm attending each and every one of you. Kindly stay put. And Balu, here we go, Balu. Balu, this is our normal offer. If you are joining now, you can join at the special offer price. Do not miss this opportunity and do not value the diamond membership by the fee. Okay? Value it as investment in yourself. Saurabh, coming to you. Here we go, Saurabh. You are our existing learner. So this is the offer I'm opening up for you. If you're joining now, right now, you can get into diamond membership at the special offer price. Hemant, coming to you, Hemant. Hemant, I think you are our existing diamond learner. So Hemant, you need not pay anything now. Ashish Sharma, we just received your message. And Ashish, let me check. Okay. So Ashish, here we go. Ashish, this is the normal offer, but you are our existing learner. So I want to give a very special offer for you now. If you are joining now, right now, you can get into diamond membership at the special offer price. Kindly check Ashish. And Rajesh, yes, Rajesh, just saw your message. You are our existing learner. Karthik, just give me a minute. Okay, Rajesh, I'm coming to you. And Rajesh, if you are joining now, right now, you can get into diamond membership at this special offer price. Go for it. Let me know once you are done with the payment. Investing in diamond membership means you are investing in yourself. And Karthik, I'm just checking your number 96. Yes, Karthik, I just received your message. Okay, you don't see the offer. Here we go, Karthik. Karthik, this is the normal offer we have for diamond membership, but if you're joining now, I can open up the special offer for you. If you're joining now, I can open up the special offer. And whoever have completed the payment, please let me know. Please let me know. Whoever in the process of enrolling, type enrolling. Whoever have completed the payment, let me know. Yes, I also got message from 97717. Okay, Manoj, you have completed the payment. Congratulations. Let us all put our hands together to congratulate and welcome Manoj Mishra for taking the lead today. Manoj completed the payment and now upgraded to Diamond membership. Manoj, just put your email ID there. I will immediately arrange access for you. And I got the message from 97717. Here we go. This is the normal offer we have for Diamond membership. But if you are joining now, right now, I can provide you the special offer. If you're joining now, right now, this is going to be the offer for you. Go for it. Let me know once you're done with the payment. Okay. And Manoj, yes, I got your email ID. I'm going to arrange access for you. Manoj, I think there is some confusion. You have transferred 2499, right? 2499. Is it for credit and financial analysis 1 year subscription? Because I think we are yet to give you the offer for diamond membership. Okay, you paid 2499 1 year membership. Okay. Okay, so that's a different game. That's not diamond memberships. Okay, so don't think that I'm giving you access for diamond membership. I'm going to give you access for 1 year of credit and financial analysis. Whoever have received the offer, whoever in the process of enrollment, keep me in loop. Once you are done with the payment, kindly share me the payment proof. Immediately, I'll be arranging access. And any of you still not yet received offer message, kindly let me know. Okay? Any of you still not received the offer message, please let me know. Yeah, Samvedna Singh. Samvedna, yes, got your message. Just give me a moment. Yeah, yeah, I just saw your message now. Appreciate and hope you know this is a normal offer, but you are our existing learner, right? So I'm opening this special offer for you now. Samvedna, kindly check. I have given you that special offer. If you're joining now, right now, you can get into Diamond membership at this special offer price. Go for it. Let me know once you are done. Okay. And Lokesh, I'm coming to you. Just give me a moment. Girish, good morning. Sunday, Diamond. Yes, Girish. Here we go, Girish. Girish, have you enrolled in any of our course already? I don't think, right? Okay, don't worry. I will give you Independence Day special offer. Girish, this is the normal offer we have for Diamond membership, but as part of Independence Day celebration, if you are enrolling now, you can get into Diamond membership at this very, very special offer price. Go for it. Let me know once you are done with the payment. Once you are done with the payment. Samvedna, have you received the offer now? And Lokesh, we have factored you. We have factored your earlier payment. That's why we gave you that additional discount. Anjana, the normal price of Diamond membership is 19,990. Now, can you do the math? Can you do the math for yourself? Okay, look at this. Anjana, kindly check your WhatsApp. Gaurav, coming to you. Just give me a moment. Gaurav. Golgani, you are our existing learner. That's why instead of 19,990, you got some special offer. Golgani Lokesh, kindly check your WhatsApp. If that works, go ahead, complete the payment and let me know. Gaurav, kindly check this. Gaurav, kindly check this. And I also got message from 97717. Yeah, here we go. Please join through this. Follow this procedure and complete the payment. Any of you facing some challenge in completing the payment, let me know. Golgani, go ahead, complete the payment. Sending you the link now. Use this link, make the payment. Complete the payment and share me the payment proof. And I already noticed somebody completed the payment. We have to give him a warm welcome. Okay, that's by Samvedna. Samvedna, let us all put our hands together to congratulate and welcome Samvedna. Samvedna, congratulations. We have successfully received your payment and warm welcome to Diamond membership. Warm welcome to Diamond membership. So, congratulations. Congratulations. By now, you should be getting the guidance messages. I'm already a member. I joined yesterday. Okay, so here we go. Here is your offer. Now only enroll now and close this. Santosh, kindly check. Kindly check. Okay, this is your last offer. Abhay, kindly check this. Anybody else not yet received reply from me? Anyone? Not yet received reply from my end? Ashish, have you received the offer? Ashish? Lokesh? Rajiv Kumar? Okay, Rajiv Kumar is 97717, right? Yeah. Yeah, Anjana, go ahead, complete the payment. Let us know. We will arrange access right now. Okay, I just got the message from 98607. I'm arranging a discount for you, special discount for you. Just give me a moment. Okay, I hope you know what is the normal offer for diamond membership, right? This is the normal offer. But as part of this Independence Day celebration, I'm giving you the special offer. If you are enrolling now, right now, you'll be able to join at the special price. Kindly check your WhatsApp. Kindly check your WhatsApp. Sujit, anybody else completed the payment? Let me know. Lokesh, if you're done, let me know. Sujit, we just received your message, Sujit. Sujit, here we go. First of all, you are our existing learner. And Sujit, this is our normal offer. But if you are joining now, I can provide you diamond membership at the special offer price. Go for it. Let me know once you're done with the payment. Okay, 98607. We offered you this price. Will this work? Let me know once done with the payment. If you're done. Ashish, coming to you, just give me a moment. Ashish, because of your earlier enrollment only, we gave you this offer. Okay. You got this offer because of your earlier enrollment only. Kindly check, Ashish. Kindly do the math. Okay, Santosh, I think you're facing some temporary technical issue. Are you okay with UPI options? And Golagani Lokesh, let us all put our hands together to congratulate and welcome Lokesh. Lokesh, we have successfully received your payment. We have successfully received your payment. Congratulations. Congratulations and warm welcome. Kindly confirm your email ID so immediately I can arrange access for you. Kindly confirm your email ID so I can arrange access. And Girish, let us know once you are done. We will immediately arrange access. Santosh, I think your payment is through. Santosh, M. Sarva Santosh Kumar. M. Sarva Santosh Kumar, we have successfully received your payment. I think after the glitch or something. Santosh, can you check whether you have received the acknowledgement email? Please let me know. And Lokesh, yes, I got your email ID. I'm going to arrange access for you. Here we go. Yes, I'm upgrading Lokesh as our diamond member. Let us all put our hands together to congratulate and welcome Lokesh into Diamond membership. Lokesh, we have successfully received your payment. You will be getting guidance messages very shortly. Yes, you started getting them. It means you are our lifetime Diamond member. Be ready to spend some quality time every day. Be ready to spend some quality time every day to transform, to upgrade, to grow. Congratulations and warm welcome. You will be receiving 5 messages. I want you to pay, sorry, I want you to read all the messages. Especially the second message has a guidance video. It will be like 8 to 9 minutes long. Please read that fully. Okay. There's a text and a video. Both read that and watch the video. That will guide you how you can get the best out of Diamond membership. Okay. Gaurav Prajapati, Diamond membership has an investment. Okay. We can provide you payment flexibility, but we cannot reduce the value of it. I understand your situation. We can provide you an option to make payment in parts, but we cannot reduce the value of it. I hope you appreciate. And Santosh, let me check once again. Santosh, can you please confirm your email ID? Please confirm email ID. Okay. Somebody is saying we have this offer early. See, the point is diamond membership. is growing week after week. Actually, the price keeps increasing. If you are getting the earlier offer, that itself is an offer. Why? Because with every week and month, the contents are getting added. So obviously, the price will also go up for new learners. For existing learners, it's not a deal. They will not. They need not even look at what is the price of diamond membership once they enroll. Okay. But still, Rajiv, I'll give you one option. This is an offer I have for you, the final offer. Okay. If you're enrolling now, you get this offer. If not, next time when you come, the price will be even more higher. So, Rajiv, this is the final offer for you. If you are enrolling now, right now, you can get into diamond membership at this offer price. Got it? Yeah. And Santosh, I'm just checking your case. Is the email ID same? Let me check. Hey, Santosh, we have successfully received your payment and diamond membership is also activated for you. Maybe after a few minutes, just check your bank account whether the amount is debited or not. Okay? Yeah. And let us all put our hands together to congratulate and welcome Girish Kondaru. Girish, congratulations. We have successfully received your payment and warm welcome to Diamond membership. Warm welcome. And Ashish, I'm coming to you. Just give me a moment. Ashish, here we go. Yesterday, you have joined in credit and financial analysis course. Okay? You have joined in credit and financial analysis course. I told you this membership has 130 plus courses. In that, credit and financial analysis is just one of the course. It means with the diamond membership, you get another 129 courses, hundreds of ebooks, access to several live classes in the past, access to future classes, and whatever we are going to publish in future. And the normal offer price we charge for diamond membership is like 19,990. Since you joined yesterday in our course, we gave you a reduced price. Kindly do the math by yourself. 19,990 minus what you have paid should be the ideal price. Is that what we offered you, or is it something different? Just check and let me know. Okay. And Saranya, we have given you this special discount. Okay, Santosh, you'll be getting the guidance messages in your WhatsApp 1 minute from now. 1 minute from now, that will guide you how you can get the best out of Diamond membership. Okay. Rajiv Kumar, go ahead, complete the payment and share me the payment proof. I could see you have initiated. Yes. Anjana, congratulations. We have successfully received your payment. Hope you got the guidance messages also. Anjana, have you received the guidance messages? Yes, congratulations. Kindly read all the messages and watch the guidance video also. It will be like 8 to 9 minutes long. Maybe you can even sign off also. I mean, we don't have any academic discussion or uh, topic discussion after this. But today, 3 p.m., we have a session. It's an open session, awareness session for all on the areas of term loan and project finance. If you guys are available, please do attend 3 p.m. session. It's a foundation basic session, but it will help you to set a solid foundation. Okay? Yeah. And Ashish, Saranya, what you can do is try this. Anjana, I cannot quantify that because it's like an university. It has like 130 plus courses, 8,000 plus videos, several hours of live classes. So we have not quantified it, and we don't want to. We don't want to because we are not selling a product here. We are giving you a continuous learning ecosystem. Anjana, is that okay? Okay, okay. So you are asking for 3 p.m. session. It will be same like 60, maximum 75 minutes. Okay, that was my misunderstanding. Ashish, here we go. Ashish, done? Okay, giving you the payment option. Are you okay with UPI? Which payment option you prefer? Let me know. UPI, okay. I'm giving you this. You can use this number 7736022001. Okay, whoever received the offer. Yeah. Yeah, Saranya, kindly check. Ashish, once done, let me know with your email ID. I will arrange access. Okay. Yes, Rajiv Kumar, congratulations. We have successfully received your payment. Rajiv Kumar, congratulations. Kindly check whether you have received the confirmation email. Yes, Ashish, for phone pay also you can use the same number. You can use the same number for phone pay also. Okay. Let us all put our hands together to congratulate and welcome. Congratulate and welcome. We have successfully received your payment. Rajiv, you should have received the confirmation messages in your WhatsApp also. If not received, just let me know. Let me check. Yes, you started getting them. Good. Congratulations. Warm welcome. Harish Kumar, we just received your message. Just checking. Give me a minute. Gaurav, yes, it focuses, it's like an university, I told you, no? It starts from basics, it goes to advanced deep discussions as well. Yeah, Ashish, I'm just waiting for you. Once done, let me know so I can arrange access and we can close the session. And whoever have initiated the payment, whoever have completed the payment, or wanted to join, this is the best offer ever, coupled with Independence Day special deal. Taranya, you have already enrolled in course. That's why you got this offer. Yes, Harish, we have successfully received your payment. Congratulations and warm welcome. We have received your payment. Okay, so I'm closing the session now. Ashish, if you are making the payment now, you will get the access. Otherwise, it might go. Okay. So thank you all. Thank you so much. We will meet once again 3 p.m. today. Bye bye. Ashish, if you have done the payment, kindly share the payment proof. Our team will arrange access for you.